work the first few days of the cycle, but it was very important for me to take up a short break. So you will not hear my voice so loud more than this, but I believe I am loud and clear. So my voice will not expand more than what you can hear. We cannot take breaks for a long time because of what we are supposed to do. It's all about if we can feel better, then we must get to work. Okay. We must get to work as long as we can feel better. We cannot wait to recover fully, but we believe with God's grace, we shall be able to get all things running. So you are most welcome. And throughout this week, I'm going to talk about simplified trading. And today, I will discuss one indicator or two if God allows. And because my energy is not so much, you'll find that I might discuss one, tomorrow one, then on Wednesday, we shall get in for the practical part of the business. All right. So let's get into our lesson for today. I just want to confirm that I'm loud and clear because that's where the synergy of today's training is. Along the way, as we build our successful journey, we need to understand that adaptation is key. Okay. Adaptation is key. And the reason why I talk about adaptation is that you are dealing with technology and you must be able, as a person, to basically allow yourself move through technology and allow to use technology to simplify your journey. And so today, I believe that most of us, the reason why we got started in Royalq is to automate the robot. Okay. And I believe everybody on the call would like to reach a capacity when their robot is in the automated mode. Give me a one if I'm right. You want to make sure that even when you are sleeping, even when you are doing anything, the robot is able to make money for you. That should be the ultimate goal. But when we started the business, we discovered that it was very hard for the robot to automate for us. And the reason was simple. Number one, it requires you to trade many coins. Because for the robot to work for you in a good way, you must be trading many coins. Now, when we started the business, is that the robot has two major ways of trading. This robot of Royalq has two major ways of trading. Number one, the robot can trade in what we call a one shot, and the robot can trade in a cycle. Now, let me go slow before I introduce my indicator. What is one shot and what is cycle? When the market is on an uptrend, it starts from a lower point, it forms a lower low, then it forms a higher high, then it forms from a higher high, it forms a higher low, which is the lowest point from the highest point. Then the market forms a higher point that is higher from the previous point. Then it forms a higher low, which is higher than this one. So you find that the market, since it's forming these points, we say it is on an uptrend. It has a continuous series of higher lows and higher highs. So the market is forming higher lows and higher highs. It's called the higher low because it is coming from a highest point. That's all. And when the market is on a downward trend, let me say this was the high point, the market starts forming from a higher point, the market starts forming these points, these points. So it forms a lower low, then it forms a lower high. It forms a lower low, then it forms a lower high. It forms a lower low, then it forms a lower high. Then it forms a lower low, then it forms a lower high. Now, you'll find that when we are talking about market movement, we shall find out that even when the coin is on an uptrend, when it starts from here, goes up, it forms a retracement. This is called a retracement. Then after forming this retracement, the market might decide to continue and break this point. When it breaks this point, that's why people will say it has made what we call break of structure. It has broken this previous structure. And then it goes up. Then as it is going up, it is not just going to go up direct. It will still form another retracement and maybe still continue. And so this movement of the market continuously forming a retracement, break the previous highest point, which we call break of structure, keeps on breaking and breaking and breaking and breaking until maybe it reaches a certain stage. And then we find out that the market now changes its movement. I don't know if I'm trying to bring sense. I don't know if I'm trying to bring sense. Now, there is a time that, remember, when the market is forming, let me say this is the lower point, then it forms a higher high. That's the highest point from this lowest point. It goes low a little bit, forms a higher low. Then it does not break this area here to continue going up, but around here, it forms another higher low, meaning that the market is not deciding to continue. And when we are discussing the other time, we said that during this time, when the market is in between, let me say these lines moving like this is called a consolidation. The market is not deciding until when the market breaks this thing. And we said it is called the law of cause and effect, that the consolidation or the accumulation phase of the market brings about the effect of the market rising. And this market rising is what people call expansion. After the market has formed the law of the cause, the market staying in almost the same area without rising is what they call the cause. And when the market expands, so it was like this, then it expands, it will still be able, after expanding, form a retracement. Then after retracement, then it will still expand. If it's all going to go back, or if it is coming to a downtrend, then it does what we call a reversal. So throughout all these stages that the market performs, you'll discover that there is a common thing that will always happen. Number one, whenever the market goes up, it will always try to come down. It's the point I'm trying to deliver. But then, even if you are good at technical analysis, sometimes it is very hard for you to enter a coin when it has reached this area and then you enter at its reversal. You could be a very good trader. You know how to find areas of support and resistance and everything. But it gets a little bit harder that even if you understand the stages of, let me say this is accumulation, the law of cause and effect, the accumulation will cause the rise. After the rise, it gets a retracement, an expansion, because this is consolidation, expansion, retracement. So even if you understand all these stages of market movement, ladies and gentlemen, even if you understand the market cycle, you understand the market cycle, you are very good. You attended my lessons previously that I talked about the Royalq theory, and you basically understand that the market has the major areas and this area here. So you say the market is in accumulation. Then you understand that the market is now expanding. Then it has entered the overbought area. So the market is going to come down. So you even go ahead and you understand the laws of demand and supply. With all your understanding, with all your dynamics of the market, you may find that it is very hard for you to buy or to catch the market at its lowest point. Because even when the market is coming down, like from the highest point, the market does not flow like a river. So it goes down, it forms a retracement. Targeting this point is very hard. It comes down, it forms a retracement. Targeting this point is very hard. Even when the market is going up, goes up, comes down, forms this retracement. Targeting this point is very hard. Goes up, comes down, targeting this point is very hard. So, how are we going to use our robot to help us target these important points of market reversal? That is the major topic that I'm handling this week. If you have understood, drop me a 2 in the chat. If you have understood, drop me a 2 in the chat. I told you my voice will not go very loud, but I want to make sure that I am very clear. Now, friends, I'm not saying that we are going to drop our skills, right? I'm not saying that we are not going to use our skills. We are going to use our skills. But I'm this kind of a person who believes in maximizing opportunities. Yeah. I'm this guy who says that when I meet a nice thing, I want to use the nice thing in a good way. All right. I'm not saying that we are going to put an end to our classes, no, because after learning certain things, some things might look useless, but they are very important, especially if we can be able to maximize our profits. By the end of the day, ladies and gentlemen, our goal is to make money, and it keeps to be the most important thing that I would like us to be part of. Okay. Now, having explained that, I want to explain something else. And this thing deals with time frame. Time frame. Yeah. When we are looking at the crazy morning call, guys, I have picked it. Sorry, guys. Uh, it was important for me. I told you someone called me and interrupted my training. I don't pick all calls, but there are certain calls that I must pick. Okay, even when I'm doing something. Uh, yeah, there are certain calls that I cannot ignore. So sorry for that. But I hope I'm back, and I believe my first few points were very clear. Okay, hope I'm back, and we can now be able to continue. Okay, right. Okay, so now I was talking about time frame. Okay. No, time frame. What is time frame? Time frame is just how people who trade in uh, in cryptocurrencies try to find opportunities of entry. They try to find opportunities of entry. People who are trying to get into markets, how they find opportunities to enter. So someone could look at the market in 1 minute. Another one looks at the market in 5 minutes. One person looks at the market in 1 minute. Another one looks at the market in 5 minutes. Another one looks at the market in 15 minutes. Another one looks at the market in 30 minutes. Another one looks at the market in 1 hour. Another one looks at the market in 4 hours. Another one looks at the market in 1 day. Now, I just want you to get the logic. The logic is simple. The person who looks at the market in 1 day, the person who looks at the market in 1 minute, and the person who looks at the market maybe in 4 hours, the difference is that if we could look at 1 minute as an example, and another person looks at the market in 5 minutes, it means that if this candle takes 1 minute to be complete, the person who is in 5 minutes would have 5 candles, 3, 4, 5, would have 5 candles, each of 1 minute. But all these 5, don't worry about these notifications. They always come and they are key. So the person who looks at the market in 5 minutes has 5 candles, each of 1 minute, if all the candles would come. But these candles, all of them come in one single candle, that this candle has taken 5 minutes to be complete. In short, it means that in 1 minute, the market might be on a rise, but in 5 minutes, it is just one candle like this. So this is 1 minute and this is 5 minutes. What is the difference? The difference is simple. This is a small picture. It gives you a small performance picture of the market. This gives you a big performance picture of the market. So what Royalq sat down and looked at, you find that in 1 minute there is a lot of noise. What do I mean by noise? When a candle of sellers come in, let's take an example. Let me take this coin as our learning example. This coin has been on a rise. This candle here, this is 4 hours, this candle here takes 4 hours to be where it is there. Okay, this takes 4 hours. Every candle you see here takes 4 hours to be complete. But this is a big picture. And when you look at this picture, you see the market was consolidating. So it brings in the law of cause and effect. That the effect you see was caused by the consolidation that was here. And after this market rising, what should happen? It should retrace. Okay? Because that is how the market will always behave. Because once the market has been in accumulation phase and then markup, it has entered distribution, so it has to come down. That is how the market works. And all these we have talked about them. This is oversold area, overbought area. The market has to come down. But this is a bigger picture. When you press it in a lower time frame to see a smaller picture, the look is a little bit more different. That when you are in the 4-hour time frame here, you may not trade. Why? Because when you look at the market is showing you it's moving down. But when you take a smaller picture in 15 minutes here, you see that the market is making important moves. It goes up, comes down, rise, down, rise, down, rise, down, rise, down, rise, down, rise, then it's down. So the most important thing is that how can you take all these opportunities, in the smaller picture of the game and be able to enjoy these smaller pictures non-stop. Because even when the coin is on an uptrend, like here, you see it goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down. So how are you able to enjoy these important points in the market? Because in a bigger time frame, it's like a non-stop thing. That's the question I'm going to answer throughout this week. Does it create sense now? Does it create sense now? So, because looking at the market on a bigger time frame gives you a bigger picture of the market. And so, when you choose a coin in a bigger picture, the market will take also a longer time to give you a profit. But when you look at the market in a smaller picture, the market will take a short time to deliver. So how do you maximize an opportunity in all its movement? Is what I'm discussing this week. Are we ready now to start our lesson? You've spent a few minutes. I cannot speak for a very long period of time. I've already explained myself, so I can't stay here for very long hours. So I just want to share, then I go. All right. But I think by Friday or Wednesday, I'll be done with these classes. Okay. So remember, guys, the indicators that we are going to discuss, they are just indicators. I need to get these words clear because sometimes people get lost when it comes to indicators. They are just indicators. Okay, let me give an example. Um, when you are driving, when you are driving a car, and you show up an indicator that you are going to take that corner in front. As you are about to approach the corner, is it possible for you to change up your mind? Is it possible to change up your mind? Because I don't want to deal with people who have grammar. I want people who understand. You are driving and you want to take up a corner. As you are getting, you have shown the indicator. Is it possible to change up your mind? Now, the market also behaves the same way. I don't want to deal with people who have grammar. Indicators will show you how the market could behave. But it is important for you to know that the market can change its mind. Is that give me a two if that is also clear? I don't want to cram one. I don't want you to cram. So the market can also change its mind. And it says, I was going up, but according to how, because we talked about the law of effort and results. We talked about the law of effort and results. And the law of effort and result, we said that for the market to go up, there should be an increase in the trading volume. That the volume, the amount of buyers, the amount of money buyers are putting in the market must be greater than the amount of money that sellers are removing from the market. And if it so happens that the amount of sellers exceeds the amount of buyers, even when the indicator showed the direction, the market will go down. Does that make sense to you? Today, I deal so much with understanding than cram up. So when you are trading in the market, even when you use indicators, get to a capacity of understanding that you must use your robot in a good way. You must be able to provide the two major instructions to what the robot will do when the market rises and what the robot will do when the market goes down. So do not reach a time and say, this is now what I was looking for. Hmm? Do not reach a time and say, this is where my life is going to change from. Because the law of effort and result, because some people, I'm not here to discuss, to depend my time on laws, but what I'm trying to bring to your concern is simple, is that the results you see of the market going up, the volume of traders or the volume of the money entering the market must be increasing also at the same time. So if the volume is down, the market will take another direction. So indicators are just indicators. They do not control the market. They do not determine the total results that will come out of the market. Does that make sense to somebody? And once that is in your mind, you must make sure that even when you understand what I'm going to talk about, you must provide the two market directions of the market. Number two, then I do this and I end. Having given you that mindset, the other important issue is that Determine which kind of a person you are. Okay. Determine which kind of a person you are. I don't know if I'm creating sense because we are of different types. What do you mean, Julius? There is a person who, like now, markets are going down, that when they are floating $50, when they enter coin and the coin goes down and their $50, their value is down by $50. They're like, I'm going to slaughter myself. But there is a person, when even they are floating $200, they are like, it's okay. Does that create sense also? So you must be able to determine yourself, okay, you as a person, that me, when I enter at a certain price and the market goes against me, because even though we come here and talk about opening up of many margin calls and making money as you are in sub sales, I understand it works. But you as a person, when you enter coin and the coin goes up and the market takes a downward movement, which is the best, by the way? Let me explain. I want to bring in logic because this is also another big challenge in our business. And I usually see, for example, I will take 15 minutes because that's where my focus is. Okay. We use the indicator, let me say, and we entered the market from this point. When we entered the market rose up a little bit. It did not reach our take profit. And the market started going down like this, like this, like this. Now look here. If in my coin I had started with $10, and when this coin goes down, ladies and gentlemen, it will put in more. Let me say, puts in another 10, it puts in another 10, it puts in another 10. So now my coin has $40 invested. Here comes the question. If I had only put in $10 and the market rose, and another one, wait, the market went down a little bit and $40 got in, who of the two will make more profit? Who of the two will make more profit? The one of 10, the one of 40? I'm sorry, today it's all about, I want to teach something where people are able to understand who of the two will make more money. The second one. Now, why is it that when markets go down and more money, someone started with $5, now their coin has $80. Why is it that when the market goes down and it puts in more money in that particular coin, which we basically call floating loss because you entered when the coin was $5, now it's down at $2. Why is it that people get annoyed? Let me get your understanding. Why is it that most of you get annoyed? You get annoyed. You are very tough. You are writing everywhere. You on the walls. If we were in school, you would be writing in toilets, on the roof, on the ceiling, complaining, floating loss. You everywhere. Some of you even make videos. If we were in school, you would be writing in toilets. Never forget floating loss. Never forget floating loss. Never. You would be writing everywhere. Because the instance of the market going down, unless you are providing wrong settings, the instance of the market going down is that you want to make sure that your robot puts more money in the coin. Does that make sense to somebody? The instance of the market going down, you want to make sure that your robot puts in more money in the coin. Does that make sense? Does that make sense? Does that make sense? Does that make sense? Because when you enter coin and the market does not come down, your robot will not buy more. And when your robot doesn't buy more, it will give you less profit. I don't know if someone is understanding me. I don't know if someone is understanding me. When you enter coin and it just pumps, it will give you less profit. Now, work on the person you are. Work on the type of a person you are. If when the market goes down on its cycle to buy more, when the market goes down on its cycle to buy more, when the market goes down on its cycle to buy more and you have issues, I want to recommend you to switch on the AI margin call so that instead of the robot just following, when the market drops 1% and rises 0.1, robot buy, it will apply the AI to find a right time to invest in your money. Give me a 3 if I have collected that now. So when you set up your margin calls and you don't want your robot to put all your money in the market, now you want to use another cause to allow your robot to only invest in your money at the right time. So switch on the AI margin call. Now, here comes a scenario. Someone switches on the AI margin call and then they switch off the margin calls. The AI follows the margin calls. So when you switch on the AI, also make sure the margin calls are on. Okay. The AI doesn't put in the margin calls itself. It looks at how you set your margin calls. So it follows your margin calls. So make sure the margin calls are on and the AI is on. Are we at the same movie station now? Are we at the same movie station now? So I don't want to continue to see those videos you keep making online, complaining everywhere because you have failed to find yourself. I want you to discover yourself so that you stop writing on walls. Some of you, you would even use vulgar language online because you want to express your point. And as you do that, you find these small boys online. There was a certain guy I was watching some videos, and now they are saying that guy is very bad. He's stealing our money. He's stealing our money. He stole your money. Please run away from him. He's no longer part of us. He's a very bad guy. And, it gets back to the manipulation that people have when it comes to money. When they find you very weak, they want to manipulate you. They want to use you to their advantage because you look weak. And they don't have a permanent solution to the problem. So it's just your personality that is a challenge. And I want you to work on that. Switch on your AI margin call and be able to, the problem is not your upline. No, 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 no. I don't have time to dig deep into that. I usually say I'm this kind of a person who's very grateful that the person who introduced me to Royalq showed me where I can learn from. Does that make sense? Does that make sense? I don't know. Does that make sense? That what someone did for you is to give you a link to come in here. Because when you come in here, I will teach you what you are supposed to do. So stop blaming the person. The person did a very good thing. He brought you in the business. So you have activated your robot. You are part of our community. Learn what you are supposed to do. The day you will learn to say that if things are going to happen, it's about me. and you stop blaming another person, then you are going to be very successful. So being it's you, the business, understanding what you are in. It's not your upline. Okay. It's not because when your upline gives you a link to join a training where they teach you what you are supposed to do, stop blaming your upline. So, am I clear with the AI margin call? Let me know, give me a 2 in the chat. So, work on your personality, find out who you are. How do you feel when the market goes against you? And work on that. And if you have issues with how you feel personally, please switch on your AI margin call, and it will prevent you from issues of feeling bad when markets go against you, because it will prevent your money getting into the market at a higher rate. Okay. Uh, After making good loss, maybe we will get profits after learning. You have not lost anything. I'm not going to, Tony, I'm not going to give you my time. Let me leave you for today because you still have a long journey to go as a person. You still have a very long journey to go as a person because you still have issues. It is just you personally. You don't want the robot to drop your money very fast in the market. Switch on the AI margin call, right? Switch on the AI margin call. You can switch it on from the start of the coin. The guys, as I'm teaching, I do not have points of do this, do this. I just teach you to understand. I don't know if people are on the right call. Please, this is not cram work. When, how, understand. I don't know if people are following what I'm talking about. I'm not here to tell you when to switch off, when to switch on. Understand. My call for today, all my calls, I'm just raising my voice to bring understanding. My calls are meant to bring understanding. They are not meant to bring cram work. And if your goal is not to understand, then you're on a wrong call. I don't know if I'm bringing sense here. My reason of coming here is not when you should do what and when. When should I switch it on? It's just your personality. You have issues when markets go against you. You feel bad. You don't want your robot to put in your money at a higher speed in the market. You want your robot to be responsible to when it will put your money in the market. So use the AI margin call. Does that make sense? So if you don't have issues, don't use it. It will just follow your instructions. But if you feel bad, then use it because it will help you. It will help you not to put your money very fast in the market. So it is not grammar work. I just want you to understand. Okay? Now, I think we have built a right mindset. You know, usually when you are teaching, um, someone is entering a taxi in Masaka, but at the same time he wants to be in Kampala now. So you have not even introduced the indicators to them. Now they're asking you, how can I use my capital? How can I go for hour? How can I? So you are still traveling. You have just given them a mindset of understanding, and you haven't even started the car, but they want to be the destination at the same time. Okay. That is also another challenge. They want to be there before you reach there. They're like when we used to be in school, and there are people who want to sit on the front. So when they sit on the front, they think they'll reach faster than everybody. So when the car parks, because they sat on the front. They feel like they have been faster than everybody, yet all of us are in the same car. Now, in just 10 minutes, the indicator we want to look at today, having provided mindset, the indicator we want to look at today is called KDJ. So KDJ is a technical analysis tool, and it's this one here. So when you tap on it, it's this one here on your Royalq. And it's commonly used in trading to analyze price trends and momentum. Okay. It is an advanced version of the RSI or the relatives. This is the advanced of this. Okay. Incorporating on an addition of the J. So it has three lines, the J, which is that line there, the K, which is the orange line, and the D, I think, which is, I don't know the color, purple or something like that, anything. So the K line is the first line. It represents the current price position. It represents the current price position relative to the higher low range over a respective period. So when you put this coin in a 15 minutes, where you see the K is at 7, down here, around there. So it represents the current price position, where the current price is in position in relative to the high and the lowest point in the market. Now it also has the D line, which is a moving average of the K. It also has the D. Okay, the D is the moving average of the K. And it also has the J line. The J line, it just moves with how the market is moving. When the market goes up, it goes up. When the market goes down, it goes down. So I may not go into details, but let's go how it works. The KDJ is an indicator that moves with the momentum in the market. It's like other indicators. It moves from 0 to 100. And it has two areas, the overbought zone and the oversold zone. So when the line is above 80, so if this is 0 and this is 100, when the line is above 80, the coin has been overbought. The price must be overbought. And this signals potential downward movement. Okay. And when the coin is below 20, we said from 0, below 20, it has been oversold. And this indicates potential upward movement. Now, so this one is oversold. This one is overbought. Simple. Crosses. These things are very simple. In most cases, when the K line, which is the orange line, this one, that one there, and the D line, when they cross, it signals a potential entry and exit point. For example, if you see here, there was a crossover, and when the crossover happened, the market went up. You see here, there was a crossover. So whenever it crosses, a bullish signal is when the K line crosses the D line, crosses above the D line. So the K crosses the D. That one is a bullish signal. And there is a bearish signal when the K crosses the D above it. So here it went above, here it crosses and it comes below. So when the K crosses below, so here when it crosses above, below, this is bullish, this is bearish. Here we expect the market to go up, here we expect the market to come down. So these indicators are used to identify trend of the market. So when it crosses below, you'll understand the market is going to be on a downward trend. So these indicators, number one, trend identification. So when it crosses, you know the market's going to be on an upward trend. Number two, momentum. The J line, the line that moves very fast, movements to highlight strength of momentum. For example, let's pick any coin that is doing well, because that one is suffering. That one is suffering financially. Okay. Now, the J line sharp movement highlights strength of momentum. The momentum is for sellers. So traders use the crossover and extreme areas of overbought to decide entries and exits in the market. So the advantage of this indicator, it's more sensitive than traditional stochastic RSI. It offers more clear signal for short-term traders. That's why we are focusing on 15 minutes. Limitation, it can provide false signals in highly volatile market scene. This indicator can provide false signals. It works best when combined with other indicators. Now, when you want to use that indicator, which we are going to dig so much in the coming days, and you come and switch from RSI to KDJ, it will give you, do you want the golden cross? This is called the golden cross, when the K crosses the D. So whenever the K crosses the D, the robot will buy. But remember, am I still live? Am I still here? Because I'm now finalizing. I saw my sister call me, but since I'm finalizing, I'm not gonna pick her. Am I still live? Okay. So the K at the golden cross, when the K crosses the D. So this is the golden cross. Now, remember, we also said that, if you remember, that it's from 0 to 100. When it is at 80, it has been overbought. When it is at 20, it has been oversold. So what they are trying to ask is here on line of trigger, when should your robot buy? Should it buy when the golden cross, if this is 100, this is 80, this is 20, when it is less than or equal to 30? Or should it buy when it is less than or equal to 50? So meaning that if this golden cross happens to anything less than or equal to 50, the robot should buy. Or should it buy when the golden cross has happened, when it is less than or equal to 30? So when the golden cross happens here, below 30, or when it happens below 50. So it can happen at 50 or below 50. Or it should happen at 30 or below 30. Does that make sense to someone? Does that make sense to someone? Meaning that when you say less than or equal to 50, you have even cared for 30. Does that make sense? When you choose that of 50, even when it will happen below 30, you have cared for it. When you choose 30, when it happens above 50, above 30, you have not cared for it. Now let me bring logic and understanding again. And I'm concluding with this. We have trader A and we have trader B. Listen to me attentively. Trader A only buys coins here and rises with the market. Trader A. Trader B buys coins when they're around here and goes down with the market. So trader A buys 1, 2 margin calls, then rises and makes money. Trader B buys from here. The robot puts buys, then after rises with profit. Who of the two will make more money? Trader A or trader B? I need logic. Who of the two will make? I want these issues of floating loss to be one of the issues that people don't have. So if you are choosing to use KDJ, which one would work best? Less than or equal to 30, less than or equal to 50? I want logic. Less than or equal to 50, less than or equal to 30? I want logic. Less than or equal to 50. I hope we had amazing call for today. Tomorrow, I'll talk about another indicator. Throughout this week, I'll be discussing these indicators. And then after, I'm going to show you how you come up with settings and also show you how you set up your robot to keep winning. I wish you all the best. I hope you have been able to learn from me and it gets back to you to make personal decisions. My role is just to share. The work is on your side because the learning is in the doing. This is not a cram work class, it's an understanding class. And if you fail to understand, then it gets back to you. Okay? so so you choose your type. If you are going in for 30, may I have no problem with you. If you are going in for 50, may I have no problem with you. Okay? But the person who will enter the coin at 50 will make more money because his robot will continue to buy as the coin is going down. And when the coin rises, this person will be able to make raise a profit. Okay? So the rest is up to you. So that's why I go back, find your personality. If you have issues with the markets, find your personality that me, I belong here. So and always switch on your AI margin call to prevent yourself to have issues with the people. Okay? So I wish you all the best. And I think that's enough. The rest of how set up, I think will come throughout the week. All right. So I wish you all the best. And see you on the next call. I'll put this to an end today. And thank you for coming. Bye, everybody.
signal selector, and Dr. Stevenson, the musical genius. Crypto to the world. Crypto blessings, money keep growing. Buy a Q, anything we use it. Economic power we pursue it. Big up place where I signal selecting. Dr. Stevenson, tune connecting. Crypto family, we celebrating. Crypto trade, me say money on my hand. Thanks to Royalq, me stacking up my grand. Economic freedom, me a real job man. Peace bearer, you a genius with the plan. Selecting signals with precision. Profits rising like a vision. Crypto flow, no more recession. Only secure, no tension. Crypto blessings, money keep growing. Royalq, anything we using. Economic power we pursuing. Big up base, signal selecting. Dr. Stevenson, you connecting. Crypto family, we celebrating. Yo, crypto ambassadors, salute them all. Financial growth, we standing tall. No more struggle, no more fall. Royalq, we ballin' global. Money multiply, no be big. Crypto invest, we celebrate. Big moves, financial state. Economic power, elevate. They swear on to pick up your status. Signal selecting your device. My love ISIS, you're priceless. Crypto queen, you're fearless. Crypto blessings, money keep growing. Royalq, anything we use it. Economic power we pursuing. We got basement, signal selecting. Dr. Stevenson, tune connecting. Crypto family, we celebrating. From zero to hero, wealth increasing. Crypto trading, life enhancing. No more 9 to 5 stressing. Royalq profits progressing. Base player, we hear your name. Crypto queen, tapped again. Tap dash people, son, big up the fame. Is it about global? No shame. Crypto blessings, money keep growing. Royalq, anything we using. Economic power we pursuing. Big up base for a signal selecting. Dr. Stevenson, true connecting. Crypto family, we celebrating. Crypto ambassadors, it's it. Me is here, my love and space. Respect every time. Dr. Stevenson, genius behind the reading. Royalq, you job trading. We stacking up well globally. Now it's out to the world.
All right, have a good day. Bye, everybody.